silver's got a ways to go, but once it really starts to break, I don't know where the key level is. Is it 35? Is it 40? Where it is. But I think when it goes through 50 next time, it's going to go through it, like that proverbial hot knife through butter. And then I think 50 is going to become the support level for silver. I don't know how long it's going to kind of base build at around 50, low 50s. But then I think it could quickly double to 100, especially if gold keeps rising. So if gold goes to 3,200, 3,300, I think in that environment, silver could go to 100, and it would still not be expensive relative to gold. It'd still be pretty cheap.
The Jerusalem Post reports that governments and central banks are taking an increasing interest in silver for both its monetary and industrial purposes. For example, some central banks consider adding silver to their portfolios, while several countries stockpile silver supplies for high-tech and defense applications. Silver's use in solar power has made it a strategic metal. American investor and prominent supporter of gold, PeterSchiff emphasizes that silver may have even greater short-term potential as retail investors turn to it. Given the current market conditions, the possibility of silver reaching $100 per ounce is no longer a far-fetched idea, but a realistic projection within the next 10 to 15 years. Based on market trends, PeterSchiff notes that while emerging market central banks are accumulating gold, American investors have been selling. The price of gold has increased tenfold this century, with countries of the global south, in particular, buying on a massive scale. Russia and India have also been adding to their gold reserves, while European central banks have subtly increased their holdings. The total global central bank gold purchases reached 1,082 metric tons in 2022, 1,051 metric tons in 2023, and another 1,041 metric tons in 2024. This trend underscores a long-term shift towards gold as a financial hedge that could keep demand elevated for years. Concurrently, Schiff notes that despite stock market highs, the S&P 500 has lost 57% of its value in gold terms since 2021. In USD terms, gold has grown 9.99 times since 2000, significantly outperforming the S&P 500, which has grown 4.34 times during the same period. This indicates that gold has more than doubled the returns of the S&P 500 over 25 years. Additionally, Schiff highlights the undervaluation of gold mining stocks, stating that many are trading at low price-to-earnings ratios compared to mainstream companies. Shares of gold miners are soaring in the early months of 2025, as risks around inflation and geopolitics push analysts to ramp up their outlook for the precious metal, a classic haven asset. Now we present the clips of PeterSchiff's insights from their recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
The public has been missing, and the public is usually the buyers of silver, not the central banks. They say it's the poor man's gold. When gold got up near 2000 in 2011, when the public was involved, when the Fed was doing QE and everybody was worried, and gold prices got up to 1900, silver got up to 50. Now gold is 50% higher than it was at that peak, and silver is 40% lower, right? So silver's got a ways to go, but once it really starts to break, I don't know where the key level is. Is it 35? Is it 40? Where it is. But I think when it goes through 50 next time, it's going to go through it, like that proverbial hot knife through butter. And then I think 50 is going to become the support level for silver. I don't know how long it's going to kind of base build at around 50, low 50s. But then I think it could quickly double to 100, especially if gold keeps rising. So if gold goes to 3,200, 3,300, I think in that environment, silver could go to 100, and it would still not be expensive relative to gold. It'd still be pretty cheap. Well, I mean, they didn't care about 2,000, so I don't know why 3,000 would be much different. So I don't know if it's a number that's going to be the catalyst for investors to wake up, not only to the opportunities in gold in the bull market. Gold is now up tenfold since the low in 1999, 2000, 2001. It's outperforming the S&P. They were talking about the S&P hit a new all-time record high the other day, but compared to where it was January 1st of 2021, the S&P was down about 57% if you price it in gold. So, for all the, the hype in the stock market, it hasn't even beaten, a bar gold, right? And so it shows you that really what we're looking at is inflation, not legitimate increase in value. But I think at some point, investors are going to look at the bull market they've been missing. In fact, all last year, investors were selling their gold, and that's carried into this year. Americans have been net sellers of gold. They've been liquidating gold ETFs. They've been selling their physical gold. I know that just from my own gold company, where we've been getting a lot of people calling us up to sell their gold. There's been net outflows out of all the gold stock ETFs over the last year and so far this year. So Americans have been completely missing from this bull market. It's mainly been led by emerging market central banks who have been the big buyers. And they're not anywhere near done buying. They're really just getting started. They have a lot of gold to buy. So when the public starts competing with the central banks, then I think you're going to see an acceleration of the uptrend. And I think then it'll spill over into silver, because the central banks haven't been buying silver because they don't really have a place to store it, so they buy gold. But the public will buy silver. So I think silver has even more short-term potential than gold. And I think money's going to come into the mining stocks. I think Wall Street is going to take a look at stocks that are trading. I mean, the big stocks are trading at very low multiples, low double digits, 11, 12 times earnings. And that's, trailing earnings. Their actual earnings for 2025 will probably be so much higher than what analysts estimate that most of these big stocks are probably sporting PEs of like 7 or 8. Compare that to, look, Walmart, which is down 6% today, is trading at 40 times earnings. Why pay 40 times earnings for Walmart? How fast could they grow their earnings? They don't have anywhere near the earnings growth that you're going to see in these gold mining stocks that are trading for a fraction of the valuation of a Walmart.
Trump's political appointees are gradually taking office, while Republican members of Congress, many experienced in government, are recognizing the risks the Doge approach poses to the nation and their careers. Over the past month, Doge teams operated unchecked in federal agencies due to a lack of leadership. Market expert PeterSchiff argues that government programs are inherently inefficient due to a lack of incentives for cost control. While he acknowledges that certain Doge reforms may generate some savings, he believes they won't be enough to significantly cut taxes or reduce the national debt, merely offsetting some of the rising deficits. The Department of Government Efficiency has been working to save American taxpayers money by cutting programs, leases, contracts, workforce reductions, and more, claiming a total savings of $65 billion just in the last month. Despite the savings, the impact on the national debt remains minimal. According to the U.S. Treasury, the U.S. federal debt stood at $36.22 trillion as of February 24th. Let's get back to the interview.
In my quote, I said almost all, so maybe Doge could be one of the exceptions where they do end up with some savings. Now, I don't believe the savings will be nearly as substantial as the numbers that are being bandied about. But it shouldn't surprise anybody that they're uncovering waste, fraud, and abuse. As I said, you can't have a government program that doesn't have waste, fraud, and abuse. That's why you want to minimize the government programs, because you're always going to have that problem. The reason that there's always waste is because there's no incentive to be efficient. In the free market, if I own a business, I need to be efficient because I make more money if I'm efficient. That's my money. I want to spend it wisely. And if I'm not efficient and my competitor is efficient, he's going to take my business. He's going to undercut me. So you have forces for efficiency. But in government, no one gives a damn. It's not their money. Who cares? In fact, the incentives are actually to spend as much as possible, because then you get a bigger budget, then you get more power. So the incentives are all wrong in government. And, there's so much fraud and abuse, much more so than in the private sector. Look, if somebody tried to steal my money, I'm gonna try to prevent it. And if somebody steals my money, I'm gonna notice it's missing, right? I take care of my money. But the government is enormous. It spends $7 trillion a year. There's hundreds of millions of people. You think they know when somebody rips them off? It's impossible. And people love to rip off the government. They love to, whenever the government creates a program, people will alter their behavior, alter their circumstances to qualify for that, right? They'll abuse the program, and some of them will commit outright fraud. in order to qualify for the program, and the government doesn't know. I mean, look at what happened with the PPP program. I mean, and I called that out, when they first passed it, about how much fraud there would be there, because it was an open invitation to fraudsters. Because the government said we're not even going to verify anything. It's just everybody's on the honor system. Oh yeah, well, nobody's got honor when it comes to stealing money from the government. And especially, you get to a prisoner's dilemma where all your friends are stealing from the government and you feel like an idiot if you don't steal too. And so it's not a surprise that they're finding this stuff. I just like it that a lot of people that didn't realize how bad government is, how corrupt government is, how dishonest politicians are. This is great that, we're shining a light on that. And so maybe we'll create more libertarians as a result of this public outage. But, I don't think that Doge is going to be a get-out-of-jail-free card to allow massive tax cuts and pay down the national debt. I think that the savings that will come out of Doge will offset some of the increase in the deficits that are going to happen anyway.
Unstable political landscapes can increase gold demand, especially in financial markets where currencies are used as foreign exchange reserves. This can counterbalance the instability of a fiat currency such as the US dollar. With central banks stockpiling gold and silver while U.S. investors largely overlook them, could a sudden shift in sentiment trigger a dramatic price surge in precious metals? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.